On this episode of The Prediction Trade, we talk to the co-founders of Kalshi, a first of its kind, federally regulated events driven exchange. Weather markets, music markets, legislation markets, they're all on Kalshi. Tarek Mansour and Luana Lopes Lara walk us through how Kalshi came to be, where it is now, where it's going, and how to start trading today.
All you false pretenders and your freaky contenders trying to be the first. In my own opinion, you am not defending. You are the worst.
Welcome back to the prediction trade. If you can trade it or bet on it, you can bet we're going to talk about it. I'm Jeff Joseph, the editorial director of Luckbox magazine, and I'm joined by Mike Ruddy, an editor at Luckbox and the producer of the Prediction Trade podcast. Mike, we haven't done this in a while.
That's right, Jeff. And a lot has happened since our last episode. We have some breaking news, actually, that came out today, the day that we're recording this episode. Attorney General out of New York, Letitia James, just released her report into Governor of New York, Andrew Cuomo's behavior, and concluded in that report that his behavior did constitute sexual harassment. And as a result, the prediction markets unpredicted all over the place. We're seeing double digit swings. In one market in particular, as we're recording this right now, will Cuomo be in office at the end of the year? We saw as much as a 50-cent move in the no direction.
Yeah, a big move. I saw that, went in and looked at the report, not only sexual harassment, but in the 165-page report, it outlined retaliation against the aide, Boylan. So it recalls to me our guests, Anthony Scaramucci and James Altucher, both individually spoke to this specific market. It was Scaramucci who had a lot of confidence of Cuomo's ability to withstand pretty much anything and stay in market. And then the market responded. Remember, that was a real value play at that point. And then the market started to come to terms with what Scaramucci was forecasting, basically, that Cuomo wasn't going anywhere. And now it looks like we're seeing a reversal of that. So that'll be a fun market to watch. I'll tell you what I've been preoccupied with, and it has a lot to do with this podcast. You know, I've been in the beta over at Kalshi, Kalshi, new prediction market, but it's actually a regulated futures market. And we're fortunate enough to have the two founders on the show today. So we're going to be talking to them momentarily. But I've been in the beta test and making some trades in it. It's a good looking market. Everything's smooth. The orders are filling properly. And the diversity of markets is actually a lot of fun. I've been trading anything from the weather to TSA screening passengers and how many people are flying to vaccinations being reported. I've traded in each of those markets. And the one I'm obsessed with right now is this market about Donda, which is Kanye West's new album. You know anything about that?
It's not often that a presidential candidate releases an album, but no, this is sort of the big music news headline right now. Donda, which is said to be a testament to his late mother, Donda West, is going to be Kanye West's 10th studio album. I know it was originally planned for release late July. I think it was July 23rd.
July 23rd in Atlanta, right at the Mercedes-Benz Stadium.
Yeah, that the release didn't happen. I believe there was a big listening event at the stadium where he wore a mask. He, in fact, I believe, didn't say a word during the entire streaming of that album. It was
Yeah,
sort of
it's
a
it's
neat
worth
thing.
it's worth looking at the video on that, Mike. He came out on a giant white covered field in some red outfit and just stood silently while some music was playing in the background, supposedly somewhat inaudible. So it wasn't really a listening party, and that was supposed to be a pre-release party. But the rumors came out of that listening party that Travis Scott and Playboy Cardi and Pop Smoke and Roddy Rich, DaBaby, all these names are going to be on the album. Supposedly they heard their voices. But the interesting thing, I don't know if you know this. So, well, just preparing for this market, looking at it, because I'm thinking of doing something there, God knows what, but it's hard to avoid. I'm sucked into Kanye. Whenever I see Kanye as the market, as soon as he launched with that birthday party, going running for president, I'm in, right? But the interesting thing is he's actually been living in that Atlanta Mercedes-Benz Stadium, living in a room about 20 by 12 for the last week, trying to finish the album. So the question on the Kalshi market is the album going to be released on this coming Friday, the 6th? And we know there's going to be another one of those listening events on the 5th. And then somebody, and I don't know who these guys are, but somebody by the name of Justin LeBoy, apparently a music person, big following on Twitter, a couple million people. He tweeted directly that Kanye West will move the release date of Donda to August 6th. Thanks for your patience. He wants to give his fans the best possible product without rushing anything. And that specifically is the date on the Kalshi market. Will Donda be released before the 6th? And after a false release, it was supposed to be released earlier, and he moved it back now a week. And that's why he's living at the stadium in this small room with no windows. There's a picture of it on the internet that you can see. He's got a flat screen TV, a twin mattress on the floor, 20 by 12 room for the past week, no windows at Atlanta Stadium. So I imagine he doesn't want to be living there that much longer. So maybe there's a wager to be had there. Maybe there's an investment in Kanye once again. But I think that's the fun of Kalshi. I think aside from the serious markets about legislative policy and weather and COVID and vaccination and the European Union, we're going to have some opportunity to invest or trade in some fun events. So we've been trying to talk to these two for quite a while. And because it's a regulated market, I'm not the least bit surprised that they've been playing it close to the vest. But now the doors are open at Kalshi. The beta's on. You can go in to kalshi.com and check out the markets and make some investments there. And so, Mike, now that we're all Kalshi primed, where do we go from here?
Joining us on the show today are the co founders of Kalshi, Tarek Mansour and Luana Lopez Lara. Both Tarek and Luana are MIT grads and both have backgrounds as quantitative traders. In Kalshi, they created the first federally regulated financial exchange that allows investors to trade on the outcomes of future events. Kalshi's market topics range from economics and geopolitics to entertainment and public health to everything in between. Kalshi's beta is open now.
Open now and a long time coming. Tarek, Luana, welcome to the show. Nice to have you.
Mike and Jeff, thanks a lot for having us. We're excited to be here.
Yep.
Terrific. Well, we have been waiting for a while. We've been, I remember it's well over a year ago that I first read your registration statement. And of course, all of us are looking for more opportunities in prediction markets and similar markets. And the idea of being able to wager or invest on events, depending on your lexicon, is long due. So lots to talk about. We've been looking forward to having you on for a while. So congratulations on being in beta now. And why don't we start by, let's start with this. What does that mean? What does your beta test really mean?
Yeah, well, as you know, Jeff, we've been hard at work at this for quite some time now, and I'm assuming we're going to get into the regulatory piece in a bit. But so the beta right now is essentially we're getting everything right on the product front. I think a lot of what we think, the vision for Kalshi is we want to build this for the long term, and a big part of it is building the right product for our participants and the members of the exchange. And so a lot of it right now is evaluating our UI, the user interface, building something that people love, that is making it easy to use and trade on event contracts. Obviously, iterating and figuring out market topics, which is a big point of focus for any prediction market or event contracts exchange. Our fee structures and a number of other things. I think one thing I want to emphasize is, the beta, we think of it as a ramp up period as we're getting all these pieces of the puzzle running together. And we can talk about sort of what these pieces are if that's interesting. But this is real. This is real trading. It's open for anyone now. And anyone that likes to trade on these types of markets, we're ready to go.
Well, we do, and our listeners do. Just moments ago, I put a little bit down on the U3 market. Will the unemployment rate U3 in July be above 5.7? I bought the yes at 59 cents. We'll see how that plays out. But you are up and running. We've been in the beta test and trading real money, and things seem to be executing really well. We'll talk a little bit more about that in a minute. But Let's start with Kalshi. What does that mean? Where'd the word come from?
So it's an interesting story actually. Luana and I were it was like well over, I think 2 years and a half, even more. I think close to 3 years now ago. You know, we've somehow always loved names that start with K, and we were thinking about what's an interesting name for this. And I don't know if many of the people here know, but I'm actually from Lebanon, so one of my native languages is Arabic. So I was thinking about words with K. We're building this sort of exchange for all sorts of events, everything in Arabic is Kelshi, and so we went with the name Kalshi. So it was a pretty quick decisions we made there.
Oh, everything. I say. Oh, literally everything. Okay. All right. Well, that's awesome. But you can't trade everything on your market. We'll get into that in a little bit. But give us the elevator pitch. What exactly is Kalshi?
So Kalshi is the first federally regulated exchange where you can trade directly on the outcome of events. And it can be on any variety of topics, whether it's geopolitical events, economics, COVID related markets, the climate and weather, entertainment, and others. Um, what I always like to say is, the idea behind Kalshi is not necessarily new. People have been thinking and fantasizing about trading on events for a very long time. A lot of people have tried business in the space. The novelty of Kalshi is that we managed to work with regulators at the CFTC to get it regulated. So we're really the first full blown, full regulated, full scale exchange that allows people to trade directly on events.
And that's quite a process in itself. I recall when the registration statement came out a long time ago when I first read it in anticipation. I knew it would take some time, but you did it. Tell us a little bit about that process. What was it like to become the first regulated events exchange?
Yeah, for sure. So, like Tarek and I had no idea pretty much of any of the regulatory or legal landscape when we started. We were just fascinated by the idea. But in the beginning, there was a day we even called 60 lawyers to try to understand the situation, what was going on, which jurisdiction it was, and things like that. But yeah, everyone told us it was impossible. But the main reason we kept going was we never really understood why, and we really saw the value of these markets on an economic level and just good for the American economy and for people here. So we kept pushing, and for us, we always wanted to do things right. We would definitely not go through the typical Silicon Valley way of just doing things, kind of sketchy and then figuring out later. For us, it's since the beginning, let's do it right. So we went through the regulatory path, even though it was very long and painful for sure. But we want to build this for the future.
Yeah, I can also jump in here. I mean, the thing that we saw I mean, now it's 2 years and a half ago. We call it Kalshi behavior, but we can call it anything. It's really the idea that people just want to forecast events, all sorts of events, and then put money where their mouth is, trade on those events. It was such a deep and profound idea in the sense that people wanted to do it, and then when we were in finance, institutions were doing it. Oftentimes, what you see is that they're actually trying to, take exposure on an event, get exposure to an event, or hedge themselves against it, and then they would figure out some crazy, like we're talking swaps, options, just like a whole, a big mess of jumble of stuff that they put together to kind of get that exposure they want. So we saw a massive market opportunity, and then when we saw this sort of, okay, why is this not there? I mean, it's so simple and intuitive. The answer was regulation, and that's where maybe young founders a bit naive. We thought, okay, this is a massive challenge, but a big opportunity because if you could figure this out, it's really interesting. And the more we thought about it, the more we got obsessed with the idea, and we're like, okay, look, going through this regulatory thing that again, Luana said, a lot of people were telling us this is not going to work, it's impossible. It really, really seemed impossible at the time. I mean, a lot of people have tried to get this sort of the idea of a regulated prediction market in there, and it never really worked. So but we kept on going because of how interesting it would be to sort of build a market. I mean, when you always think about sort of the other derivatives market, like the New York Stock Exchange or CME out there, and the trading volumes they have, I mean, to us, it was super counterintuitive why something as simple as trading directly on events wouldn't be as big, right? Like there isn't a reason why people would want to trade on stocks more than they would want to trade on the things that relate to them, like COVID or the weather or a geopolitical event that they're reading about in the news every day. And so we went for it. It took us 2 years and a half. We could talk a bit about the process, and here we are today.
Well, you mentioned that others have tried, and they indeed have tried. What did you do differently? What was the aspect of the secret sauce that allowed this ultimately to become an exchange?
So I think the here's the metaphor that I always like to give. the thing with like this type of markets, and the difficulty, and this is the thing that we sort of learn to understand over time, is that the worries that the regulators have and all the sort of challenges they see with these types of markets are real, right? You're thinking about how to define the market, how to make sure it's not readily susceptible to manipulation, that someone cannot just change the outcome. The question of, how do you differentiate this between sort of other types of gaming? There's a lot of different questions, and the way you think about it is this ends up being, the metaphor is you end up jumping into a desert where you don't really know when the desert is going to end. And the desert is really all the sort of regulatory challenges that are going to come in the way, or the regulatory questions. And those challenges and questions sort of kept on increasing more and more over time. I think Luana and I were the ones that were like, you know what, screw it, we're going to go over this. We're going to go through the desert, even though we don't know how and when it's going to end, and keep on pushing till we get there. And I think that is at a high level, this was really the difference. I think most people would start walking the desert and they're like, all right, this is not worth it. This is too much, and stop. I think we're the ones that had the grit to sort of, you know, take it through the finish line. It was a pretty long process, a lot of challenges on the way. So I think, the first one answer is grit. Second, I think we got the team of sort of the right team, people that had worked on CFCB before, people that know sort of the landscape, helped us navigate it. Um, and three, I think there was sort of a little bit of a timing factor where we are more and more seeing that um uh, openness in the US to these types of markets and their importance, right? There's a lot of latent demand here, and it's not seen as sort of this sort of niche market anymore. It's a real exchange, uh, potentially like sort of like a commodity or derivative that can be traded on an exchange like any of the others, like stocks, rates, commodities, and other. So that timing factor helped as well.
Oh, sure. The demand is certainly out there. You've seen it, of course, with Predicted and Polymarket and Augur, the other prediction markets that are out there in various formats, and particularly during the election season, whether the midterm or general elections. But to step back, tell us a little bit about your background. Obviously, you met at MIT. You both worked as quant traders, but how'd you get together to start this?
Yeah, I'll give you a bit about my background first, and then Tarek will go. I'm actually originally from Brazil. I guess a fun fact: I was a professional ballerina before going to college, so very different background from what I do nowadays. And yeah, I worked in quant finance, like Bridgewater, Citadel, places like that. The way that we actually got together, we're both international, so we met very early on at MIT, and we have very similar interests. So we worked on a ton of different projects and machine learning, artificial intelligence, and all that stuff in college, and even like did a lot of internships together as well. And yeah, I don't know if you want to introduce yourself.
Yeah, I mean, my background will be a lot less interesting than Luana's, but I grew up in Lebanon, and was the sort of math geek in school. Was pretty obsessed about getting into MIT. I also did sort of I did skiing actually, at a professional level, before MIT. Then got into MIT and got really into finance. Worked at Goldman, Citadel, and a few other prop shops. I think one thing I would say is I always like when Luana mentions sort of ballet, and this ties a lot to regulation. Actually, weirdly enough, is a lot of what kept us going. Is Luana is one of those sort of really rare people that has the sort of optimism no matter what type mindset, and that really helped us to get through this desert that I mentioned a few minutes earlier. We can talk about that a little bit
That's
earlier. But
nice. Thank you.
I think ballet definitely helped there. In some weird, there's some weird connection there.
Well, the your trading backgrounds, both of you having done stints at prop shops and hedge funds and Wall Street firms, that that's interesting because we took note. Mike and I were looking at some of your releases, and in your public beta announcement, you made the statement that Kalshi has developed an asset class that is more natural, more human, and more accessible than all the ones that preceded it. That was interesting to me. I have a little similar background in that I was the person who developed the 40 Act mutual funds in the alternative asset class space. So we had the first group of mutual funds that hit 5 billion in assets trading in alternative investment strategies, basically using 40 Act fund structures to replicate hedge fund strategies, more alpha oriented and less beta driven, and that certainly was the intent. But and defining it, of course, for marketing reasons, to be clear, because anytime you get to introduce something new instead of another index fund, or you're catching people's attention, And at that point, we were legitimately a new asset class, to be able to deliver these more sophisticated hedge fund and arbitrage strategies through 40 Act mutual funds with daily liquidity. Uh, this is indeed an asset class. At first, I looked at it a little skeptically because, marketing bell goes off and says, "Oh, it's good marketing language," but there's really no other way to trade on events other than what a handful of players are doing, and you being the first doing it under a regulated auspice. Uh, so this is particularly interesting. So say more about that, the idea of an asset class. How do you see that developing down the road in the future?
Yeah, definitely. I mean, look, down the future, the way we see Kalshi is uh, we see it as becoming the New York Stock Exchange for events, right? When you think about stocks, that the asset class that is stocks, you go to New York Stock Exchange or Nasdaq and you trade. We want, when you think about events, we want you to go to Kalshi and trade on event contracts. So that's how we see Kalshi evolving over time. I really like the sort of mention of asset class always. I mean, the way I think about it. So one other thing that both Luana and we're pretty big financial history fanatics. If you think about the derivatives market and how it evolved over time, we started with grain futures. That was 150 years ago, and there was the question of, is this gaming? Is this gambling? And the Supreme Court ended up deciding no, this is actually a very legitimate thing. And then we moved into metal futures and other sort of commodities, and then we moved into interest rates, right? Like interest rate is a $500 trillion market today. Event contracts are just the next step here, right? It's another thing. It has economic relevance. It's really hard to argue that geopolitical events or economics or the weather and climate or COVID do not have economic relevance, and it's a quantity that people want to trade. And by people, I mean it could be institutions, it could be businesses, but I always like to describe it as a natural and human asset class because people understand events, they understand financials a little bit less so, and for us, it's the natural next step in this sort of continuum. One that can really bring in the masses, anyone, into trading on their interests.
One of the things that's interesting about the structure of your markets are that all of these are binary outcomes. Is that always going to be the case going forward? So, for example, in Predicted and Polymarket and some of the other event-driven markets, there might be a slew of choices, or several different tranches or different options, but all your markets are binary events. I think they have to be. Is that correct? Is that what we should expect to see going forward?
Yeah, so we started with binary, but that's definitely not where we're stopping. I think the next logical steps for us is looking into what we call internally range contracts, which is similar to what predicted does with different buckets, and the other one are linear over time, so they have a linear payout, a little bit similar to scalar contracts in other platforms and things like that. So the more classic, I guess, futures and options payout.
And is it fair to say, I think it's my understanding that the type of markets that you won't have will be sports and politics. Is that accurate? Or can you say a little bit more about what markets we specifically will not see on call sheet?
Yeah, so you won't be able to see sports and politics. You can see, you won't see elections specifically, but we have already in the platform a lot of politics related contracts like corporate tax being raised, income tax being raised, infrastructure bill, forbearance, and these are just some that we have right now. But we are focusing a lot and going deep into the more like legislation or policy side. So those you can already see in Kalshi, and you be seeing even more with time.
I think the way to think about this is I mean, right now we're in off selection cycle, but the way to think about regulation, the way we work with the CFTC, it's not this sort of thing where where are the sort of these hard limits. It's always this evolving thing. It's like how to figure out how to do things in a sane, responsible manner and introduce these kind of novel markets to in a regulated way to the derivatives market in a way that is sort of safe. And so the way we think about it is like over time, with this politics market, it's a gray area. I mean, with time, those will expand. Like we're gonna do more and more markets that currently we're not doing, but in 6 months, a year, 2 years, by the time we get to 2024, things might be different, and that circle might expand.
So let's talk about the restrictions. We mentioned that to our followers, and again, we have a lot of active traders that listen to our podcast. That's really what we are. Anything you can bet on, or trade on, or invest in is a subject for the prediction trade. And we mentioned in advance on social media that we're going to be speaking with you, and that's been a long anticipated event. So we did receive a number of questions, and let's start with some of them. Um, how are new markets created? A lot of people out there have ideas that they'd like to trade one particular market or another. So tell us about that process, how, if anywhere, that you take suggestions for new markets, and how long it takes a market to come to fruition, and how you decide whether or not you're actually going to add that market.
Yeah, so we have an internal process. It is centralized, so we are the ones who finally decide what goes in the platform. But user input is actually the biggest source of new contracts, and a lot of the contracts that are trading right now are actually suggested by our users. I think most of the things we focus on is are the stuff that we can ensure it's a fair market. So making sure that there's no manipulation underlying a certain contract, that it is a strong and universal contract in some way, that we have a good oracle or source of truth, have like very good and defined rules that are very clear when it's a yes and when it's a no, and there's no like indeterminacy in the middle. We also look into how it fits with the current offering of the platform and historical performance and things like that. And obviously some other compliance considerations that are internal. So it's a process of a lot of steps, but it's actually not a very long process. Like we have already like listed contracts in and like the same day that we got the suggestion, the same day we had already like submitted it to be listed. So
If somebody wants to recommend a market, where do they suggest a market? Is there an email, or where do they go?
yeah, after you sign up, you go into the trending markets, which is the biggest, the first part of the platform, and there's a suggest a market button there. But you can also send it to us on Twitter, in the I guess customer support chat on the platform or anything like that.
And even though you're in a beta stage, you are accepting all comers now at this point. Is that fair to say? So if
That's
somebody
correct.
wants to open up an account at Kalshi, KALSHI.com, it's that simple. You just go and sign up.
That's correct.
Okay. So one of the things that's going to be very attractive to the active predicted traders is the no limits. Can you say a little bit more about that? As you know, on predicted, there's a $850 cap on any one contract. You do not have any restrictions. Is that correct, or are there restrictions?
So yeah, what I always tell people, I mean, the reason why regulation is so important is that really it is the way to build proper volume, to build an exchange that can, sustain volumes similar to CME and the New York Stock Exchange. And a big part of it is the limits, right? Right now we have self-imposed a limit of $25,000 on downside exposure limit, and that limit will be increasing over time.
And just to clarify, the limit on is the amount you can lose, not the amount you can win or total participation in
Correct.
the
That's your
platform.
downside exposure limit.
Of course. And trading fees. Tell us about your fees.
Yes, we have an interesting fee structure. We've thought a lot about our fee structure, and one that can fit these types of markets. So high level, the fee structure we actually charge on average, this is average over all the price of our markets, a 1.2% is what it ends up averaging towards.
Is it on both sides of the trade, or
So great question. So it is. We currently only charge takers. We do not charge makers. So if you post a bid ask on the order book, and then you get matched, you do not get charged. If you're the one who is essentially taking liquidity off of the order book, you get charged. Our fee structure changes essentially depending on price. And for some of the more mathematical people in the audience, the way we thought about fee is what we're doing is we're taking a fee on your expected value, which we felt like was the most fair way of taking a fee on a trade. So, we essentially take your expected winnings, we multiply that by the probability of you making those winnings, and we charge a fee on that.
what's the factor or multiple on that fee? Is that the 1.2%?
No, so the multiple on the expected value is essentially 7%. I think what it ends up averaging to in terms of dollar traded, it ends up averaging to 1%, 1.2%.
Now, this morning, I looked at your market. Will the unemployment rate U3 in July be above 5.7%? I've seen some early data coming in that suggests that people are not going back to work despite the cessation in predominantly red states on some of the benefits that were being extended during the pandemic, and that hasn't resulted in more people coming back to work. So I decided to wager on the over July 5.7%. but the market wasn't open. So I was paying more attention to your trading hours. I think it's 10 a.m. Eastern. Is that accurate?
Yeah, it is right. Currently, it's 10 a.m. to 8 p.m. But as of today, tomorrow, it's actually being extended from 8 a.m. to 10 p.m. EST. And the goal is to
Is that
be
seven,
almost,
7 days a week?
yeah, seven
Yeah.
days a week. And we are expanding the trading hours of time. It's just part of the beta to make sure that we have enough time to iterate and test the engineering and all of things like that. But we are extending the trading hours, and they will keep extending from now.
Do you expect to be a 24-hour?
Correct.
Yep.
Yeah.
Correct. We're incrementally going towards close to 24 hours. I mean, there'll be a little bit of maintenance, but yes, which obviously is also somewhat of a novelty, right? Then for some of the equities markets and all of that, you have this sort of fixed schedule 5 days a week. But we're definitely pushing the envelope there, where we're going to be 7 days a week, 24, close to 24 hours.
Well, we're going to take a quick break just for a moment, but when we come back, we're going to dive into the details about some of your markets, look at them a little bit more carefully, and of course, we're going to talk about the future of Kalshi. We'll be right back.
Want a little more luck in your life? Get Luckbox, the control freak's guide to life, money, and probability. Named Best New Magazine of 2019 and 2020. Luckbox is the must-read magazine of active investors, big thinkers, side hustlers, entrepreneurs, gamblers, data geeks, and risk takers. You can buy Luckbox on newsstands, but with this special offer, receive a 10-issue digital subscription absolutely free. Visit getluckbox.com/TPT to receive the award-winning Luckbox in your inbox. Don't rely on luck. Get Luckbox. Learn more at getluckbox.com/TPT.
And we're back with Tarek Mansour and Luana Lopes Lara, the two co-founders of Kalshi. That's a new prediction events market at Kalshi, KALSHI.com. It's up and running. It's a beta, but real money in play. I know I've been in the beta for about 3 weeks now, and everything is looking good there. And they're adding markets every day, which makes this a lot more fun and a lot more interesting, particularly those who have been waiting to have more options in the events space for as many of us have, as our listeners have for the last couple of years. So as we record this, there's about 30 active markets on Kalshi. You have markets about climate, vaccination rates, GDP, student loan forbearance, and even Billie Eilish's album consumption, and one about Kanye when his next album is going to drop. Lots of variety here. What, if anything, should we learn from the early markets that you're posting? Do they have anything in common, or are you just trying to cast a wide net with respect of interest? How are these? How did these become your early markets?
Yeah, that's a great question. We really focus. This is just the beginning. We're going to expand a lot from the contracts that are currently there. The way we think about it are things that people have risks or interest in right now that are in the news and happening right now. So, for example, forbearance and COVID are things that are really affecting people nowadays. So it made sense to start the platform with these hot topics that people are really interested in, have opinions on, and risks associated with. But this is just the beginning. We're gonna you can see a lot of categories, but they're just expand of time.
Yeah, I think a lot of these are essentially, like initial settlers in each one of those categories that we're going to, whether it's geopolitics or entertainment or COVID or others, and we're just going to be expanding as we go week over week.
Right. And due to the nature of the exchange, you have source agency trading prohibitions. Can you explain exactly what that means? Your source agency trading prohibitions?
It's a great question. So, one of the regulatory, we call it, the CFTC has a set of regulatory principles called the core principles, and core principle three. I mean, it's quote unquote. Make sure your markets are not readily available, susceptible to manipulation, and that's one of them. One of the questions that comes with these markets is how do you make sure that they're fair? That if you're trading on something on a COVID market, how do we make sure that someone that is involved with the CDC, works at the CDC, that is looking at data beforehand, is not trading against others, and so that is where the prohibition comes from. So one of our rules essentially prohibits trading if you actually have access to the data early, and that's how we define it. So access to information or data that others do not have. And so if you work at any of the source agencies, you're prohibited from trading. And we actually often work with the source agencies to make sure they're enforcing that. And that also ties into our KYC process and user verification process at sign up and some of our surveillance systems that we run on the exchange.
You mentioned KYC, the Know Your Customer prohibitions and rules, and it reminds me to ask you: is this only available to U.S. based investors, or can anyone trade on Kalshi?
Yeah, so pretty much Americans and residents of the US. So you need an American ID, but you can be abroad if you're American and participate. And the goal is expand with time. We're starting with the American base, but expanding from there.
So, American residents as well. So you can
Yeah,
be here on a green card and be trading as well, or
yeah.
one of our active prediction market traders, Domer, who's very active trader in election markets. He's one of the larger, more successful traders. He saw that that we are going to have you on the show today, and tweeted us a request again about election markets, and we talked about that in the earlier segment. And if I'm understanding this right, it's election markets that we won't expect to see anytime in the near future. It's not on the immediate radar, but that doesn't restrict political markets such as policy outcomes and legislative outcomes, because you have them right now. You see a number of different markets right now related to political outcomes, like will the Senate pass a bipartisan infrastructure bill before August 10th? Um, can you say any more about that distinction? There's such a high interest from what Predicted created is a large reservoir of traders who are interested in prediction markets and events markets. They actually laid a great groundwork for you because they helped break open this new asset class in many many ways. One of the areas that were really exciting for a while they were around were the presidential tweet markets, which were kind of fun and kind of had a core base of traders that were very, very interested in that, and the approval markets like the RCP, Real Clear Politics approval markets, or 538's approval markets. What could we expect to see with respect to Kalshi's move in those markets?
Yeah, definitely, Jeff. Thanks for the question, and maybe also thanks for the question, Domer. We hear a lot of legends about Domer. We, currently the way we think about it is we have decisions, votes that, actually some of these influence the elections, right? Infrastructure bill is very important and pretty core process in American politics. And so there's the questions like politics is a very kind of large area. Whether it's these bills, there's indoor dining coming back, there's COVID mask mandates, and then with time, the way to think about it, right now we're in an off election cycle. So, anyways, currently it wouldn't be kind of really the most relevant topic today. But as Juan and I said, we are expanding over time, right? We are expanding that set over time. We're working very closely with regulators on being able to do more and more of these markets. Some of which people are really asking for. I cannot definitively comment. Part of it is a regulatory status or guarantee any markets within any sort of time span. What I can definitely say is that we're working very hard on adding more and more of those markets that a lot of users are asking for over time. I want to make one comment. So people, please, I always tell our user base and please keep on sort of suggesting markets because a lot of those markets come from our members. They know what will catch up and what will build massive volume better than we do. I wanted to make one more comment about sort of the work with regulation. One, sometimes it takes a bit more time than others. I mean, the way we see Kalshi, look, we're also fanatics and obsessed about prediction markets or really event contracts trading. It's really this Trojan horse for the industry. I mean, we really are working on proving the model right now to regulators that this is real, right? This is not some esoteric, unregulated, on the side website that is only for a niche set of users. This is something that could build volume like, the CME or the New York Stock Exchange, like any other asset class. And so a lot of that work is really building slowly and carefully towards opening up these markets, showing that the model works, showing that there's not going to be a lot of these big issues that regulators fear, and then opening up to more and more markets and contracts that a lot of the users want to see.
So you mentioned manipulation as a concern, and of course, the markets and exchanges in general have that, and the burden really falls on the investor or trader. There's only so much you can do if somebody has inside information, and they trade on it. You can't prevent that trade from occurring, but you can certainly declare that you that's legal, that you can't trade on inside information. Is there anything that you can do to police that in advance? I mean, how for example, you have a lot of markets with respect to record sales, which is really interesting. That's really fun. And there's somebody over at Capitol Records that knows, well, how many streams and downloads are there going to be, and that has that data, and they'd be able to trade on that. And of course, it's illegal as declared, as just like anybody trading on inside information on stocks. Many people have the information, but it's the trade that's illegal and not possessing the information. Is there anything proactively that you can do to prevent any inside trading, essentially?
Definitely. I mean, it's a great question, Jeff. So the way we think about it is actually not too dissimilar from the New York Stock Exchange, right? You always hear, I don't know, Goldman Trader charge for insider trading, and the way what they have is they have surveillance systems, a lot of which are actually outsourced sometimes, that flag for this type of activity. So we have the same. So we're talking about there's the rules, right, and then there's sanctions if people don't follow the rules. But the way to find and enforce is we have what we call internally the Kalshi trade surveillance systems, and now we actually it's internally rebranded into Kira. So anyone who watches anime and the audience will know what we're talking about. I'm a big anime fan, by the way. So Kira is actually essentially a surveillance systems that we've built from scratch. It's one of the sort of different systems that we've had to build over the years to get this exchange up and running. That is ingesting trading data from the exchange and running data analysis and analytics over it to flag any weird patterns of behavior, any suspicious trades, anything like that, and then we tie it to our KYC, and then it goes. This system flags these suspicious trades. It goes to our compliance department, and it could be something like a flag. Okay, maybe there's a potential for market manipulation here, or spoofing, or insider trading, and then our compliance department will investigate it using other information like our KYC data for customers or other, and then make a determination. So this is essentially how we police it. Essentially, like a lot of the other bigger exchanges, and it's also one of our regulatory duties, and goes into how difficult it is to sort of build up a fully regulated marketplace for this.
What have you learned about the early volume during the beta test on what markets are being traded with higher volume? Obviously, that's an important data set for you, is to see where the activity is actually occurring. Does there seem to be an early preference in the type of markets, so perhaps weather markets over album markets or policy markets? Um, what have you learned thus far?
Yeah, that's a great question. So we've actually been experimenting with a lot of different types of markets. The most with the most volume right now in the platform are the bipartisan infrastructure bill, and also the 2021 being the hottest year on record, which has slowly been picking up in the past couple of weeks, given the news about June being such a hot month. We see that the COVID markets like really have a lot of activity when we're talking about vaccination, late vaccination case count and things like that. And we really tie that to people having opinions on this and really being affected by it. But yeah, it's to be honest, like a lot of times we just see things popping out of nowhere, like news hot topics. We see markets starting picking up, and we're like, what's going on? And we see a ton of news about something. So there's kind of activity and stuff going on in all markets pretty much all day, which makes it all super exciting.
I would add a bit to it. We actually found it to be a little more topic agnostic than we had expected. It's a lot more about what are the topics that are currently in the news and currently hot and people are debating today, rather than like what are the most relevant categories in some sense. So what Luana was getting at is it could really come from any category, anything, as long as today people are talking about it, and then volume picks up. Essentially, is what we found. And that's the interesting thing about Kalshi is like we are a little bit of a one-stop shop for any categories and any events, not one thing, simple thing. So you can also compare across different industries and different topics.
And also looking more closely at the trading data that you have access to, does it appear as though that the majority of the trades are with the extent to hold it to outcome, or are you seeing internal trading activity?
We're seeing both. Depends on the types of markets. Some markets are more prone to people being more actively trading. Some other markets, people are trying to buy and hold more. I think they're more opinionated on those ones. But because of the such like the different types of categories and contracts and styles of like daily, weekly, monthly, even yearly, you really see all of these types of activity and I guess preferred trading styles by different members.
And the process of resolving a market, what does that look like?
Yeah, that's a great question. So we stick to, I mean, obviously we have the rules, so we stick to the rules every time. And a big pro of what we do is actually that all of our contracts, they are a legal document. They're reviewed by the CFTC and they're just legal. They're legal documents, right? With regulated exchange. So we're bound by the rules, and at settlement, at the expiration, what we do is really check based on the rules if it's a yes or a no. We have checks internally, like independent internal checks, and then we put it together and settle. Um, and there's nothing for up to our discretion. Pretty much, it's pretty much we just follow the rules. We have a legal document that we just have to follow, pretty much. So I guess another benefit of being a regulated exchange is you can always trust that the rules will be followed.
Right. And right now there are 10 markets that are flagged as new markets. What should we expect in general, like each week? How many new markets do you think you'll be adding on a weekly basis? And what's your capacity? How many markets do you think you'll have in general at any given time on average, let's say for the next 3 or 4 months?
I'll start with the capacity question, Jeff, and then we'll go from. I'll respond. I mean, Luana can talk a bit more about sort of the number of contracts per week, but the capacity, the novelty of part of the novelty of these markets is that we do what we call dynamic listing, right? This is a little bit, this is novel for derivatives and maybe commodities or even equities industries, in the sense that, like, usually exchanges decide what they want to list. They work with the various stakeholders, the brokers, the counterparties, the clearinghouse, the regulator, and then they make a plan. Okay, we are listing these 5 contracts this year. We list them, we see how they go, and then we go from there. Uh, Part of our model is, we use what we call a self-certification process at the CFTC, which is a great innovation from the commission. Our model is like I mentioned, dynamic listing, because we list as we go, and uh, with time we're going to be listing faster and faster. Right, our first self-certification took us around 6 or so months. Our second one took us around, I think, 2 or 3 weeks. And now we're down to some of the contracts that Luana mentioned. We're listing them within a few days, even 2 days.
One
Uh,
day.
yeah, there were one that was listed actually within one day. So basically, the process is going faster and faster. We basically have a whole kind of operational setup, and internally we have a whole contracts team. You literally think it as a contracts printing machine. And I'm saying printing because Luana mentioned these are legal documents. I think if you go to our product listing on the website, you will see, we're talking about 40-page legal documents for each contract, and we're really streamlining that process. Um, and I think per week, I think we want to, as we grow volume and grow users, we don't necessarily have a sort of capacity. I think we can go faster and faster over time. But right now, I think we're going for 4 or 5 a week.
Of completely new contracts, not counting the recurring ones. Yeah.
That'll keep you busy. Yeah, a lot of markets. And of course, for listeners and active traders, one thing really important to remember is that you have to look at the rules for a market and how it's resolved. For example, I just pulled up your market. Will it rain in New York City on Wednesday? Which is really that's actually a very interesting market. And how's that trading right now? The yeses are at 19 cents, the nos are at 82 cents. Will it rain in New York City on Wednesday? But if you look underneath, which you must in every market, you refer to what's called the underlying, which is basically the rules of resolution for that market. And it says specifically that the number of inches of precipitation measured at a certain point at the Hudson River at Pier 26 is the measuring point. So understanding the data point that's going to be used to resolve a market is always very, very critical. Have you edited any of your underlyings since you've launched any market thus far? Has there been any edit, or has the underlying statement defining resolution, has that stuck with the market through resolution?
That is a great question. So it has not been edited, and you should always go to the rule book on the top, and you can read the exact definitions of what was sent to the CFTC. And we will the trading rules are the trading rules. We cannot change them in the middle. We're bound by that, also regulation wise. So even sometimes we had a clarification in the market resolution, but the market rules will absolutely never be changed.
And very important, and which is going to be very important to those who are active traders, you do have an order book. You have to look for it, but there's a click a reference to an order book that you can expand, and it opens up and it actually shows you the underlying orders that are sitting on the bid and ask sides of the market. Can you say a little bit more about that, or what other features we might expect to see?
Definitely, the order book is a big part of it. A lot of people like to sort of place orders directly on the order book. You can see actually the full breadth of the order book if you expand it. From 1 cent to 99 cents. We are going to be pushing more and more features over time. So right now there's order book, there's a graph, that, and then we are going to sort of be adding a news section. Luana can talk about some of the things in the pipeline.
Yeah, news section, as Tarek mentioned, also like what you should think about for the yes and the no side. As we said, bringing on the range contracts, what we call the bucket style contracts, or linear contracts. Different types of orders. Like right now, most of the like all the orders are resting orders or limit orders. Sorry, and we're bringing market orders and other types of things.
That's very important. So when do you expect to see market orders?
I think limit orders right now is what we have. Market orders, I would say, in the next 2 weeks or so is what we're targeting towards. And then we have a few other things. One thing is that we have a mobile app in the pipeline as well, iOS and Android. And a lot of interesting features that are actually, a lot of them are coming from our members. They want to see things in one way or the other. Like recent activity came from a member, where right now you can essentially look at all your past activity and compare it to a portfolio and how you're doing. And we might also start segmenting portfolio across different, how you're doing it across different categories, and where you're performing better, and what times or when are you performing better, and all these different things that traders usually care about.
Do you expect to begin accepting cryptocurrencies anytime soon?
We have a few different payment methods in the pipeline. So, one other big feature that we are actually considering is, instant funding with ACH, which we could take another hour to discuss the sort of mechanics behind that, and how interesting and difficult this is from a business perspective. But we're also looking at other payment methods that we want to.
And yeah, and just as background, currently we accept ACH and also wire transfers. And yeah, just in case some of the listeners don't know.
I think we're considering other payment methods, and then I don't know when and how, when yet, but USDC is also something that we are considering for in the medium term, credit cards and debit cards as well.
Okay, well, lots happening over there. This is a fantastic market. It's very exciting for a lot of people. Been waiting for the opportunity to trade more aggressively in events, and in events, and particularly without the minimums that were imposed by prior platforms. So, you guys have really broken open a new market for a lot of people. So we'll see what happens next. You want to tell us about the numbers thus far? Is obviously you're scalable, and there's no limit as to how many people can come to your exchange as you continue to grow. But how many of you let in initially at this stage in the beta? How many people are trading on the market right now?
Yeah, we've let in actually 2,000, and now we're essentially open to sort of GA, so anyone can sort of start trading. And we're in the phase where we're going to start ramping up our sort of marketing and overall sort of perception and branding and all that, and PR definitely. We've been a little bit in a quiet phase, but now we're sort of getting out of it. And it's been really incredible. I mean, a lot of the traders have been extremely happy with the platform. They're we always, as a business, we look at the sort of cohorts, but those cohorts are actually increasing over time, which is really rare. And we our volume has actually been consistently doubling week over week, so we're really, really excited about that. So we're very excited about this sort of PR phase now, that we're gonna really start pushing the volume.
Oh, great. Well, congratulations again. We've been looking forward to it for quite a while, and it's great to have you on. I know that Mike and I plan to spend more time with you in a couple of weeks, because we're going to write a little bit more about the Kalshi platform and how it's progressing in the next issue of Luckbox magazine, which is going to be focused on cryptocurrencies. So we look forward to spending a little bit more time with you down the road. Um, Thank you again. There's a public beta right now, Kalshi.com, Kalshi.com, where everything can be traded for its name. On Twitter, you can follow Tarek at Mansour Tarek, Mansourtarek. Luana is at Luana Lopes Lara 2, and Kalshi at Kalshi, Kalshi, and Kalshi Markets for market alerts. It's that simple. Tarek, Luana, thank you so much for coming on. We look forward. We'll certainly expect to have you back down the road in the future and talk about, whatever your next new phases are. But thanks again. It was great having you.
Thanks for
Thank
having
you
us.
so much.
Well, Mike, where do we go from here?
We got one announcement before we wrap up today. The all new issue of Luckbox Magazine, the Thinking in Bets issue, is now available. That's the August September issue. And I'll just tell you, Jeff, it's a great read, particularly because we got a World Series of Poker champion and a champion of champions in the issue.
Hey, Annie Duke. Yeah. Listen, well, you and I were both on the call with Annie during that interview. And, she's interesting because she really is an academic first and foremost. Poker was something she took on a hobby, applied all her cognitive sciences formulas and strategies and excelled at it. And then she's flat out right quit poker and she's back to teaching. So we really get into things like outcome bias and resulting and prospect theory. It's an academic discussion of bet sizing, and that really is perfect for prediction trade listeners. And that's basically what we do over at Luckbox. So, yes, and unlike Kanye, when we say we're going to release, we release. So the August 3rd is our release date. Thinking in Bets is going to be on newsstand shortly, but it's always free in digital format at getluckbox.com. And we welcome you to pick up the latest Thinking in Bets from Luckbox. And that's it. That's all we have for the prediction trade today. If you like what you heard, tell your friends about us and make sure you subscribe to the show wherever you listen to podcasts and check out thepredictiontrade.com to sign up for a newsletter. Find us on social media, send us a message. Please do. In fact, let me know if you know anything as to why I should not be betting yes on the August 6th date of Kanye's Don Day, because that is my current thinking. So let me know if you have any insight there. But you can also find the prediction trade in print in each issue of Luckbox magazine. Go to getluckbox.com/TPT to read the latest issue of Luckbox digitally for free. So thanks again for joining us. This is Jeff Joseph.
And I'm Mike Reddy.
And remember, always wager responsibly, believe in math, master your trade, and join us next time on the Prediction Trade.